Welcome to our deep dive into the world of finance. Today, at Big Money, we're taking a close look at an extraordinary tale, the dramatic downfall of Credit Suisse. Once a titan of Swiss banking, how did this banking powerhouse become a financial pariah? Join us as we unravel the twists and turns of this riveting story, uncovering lessons along the way. Buckle up for a journey through the highs and lows of global finance, and let's begin our exploration together. Established in the mid-19th century, Credit Suisse emerged as a stalwart within the international banking industry, a paragon of Swiss financial wisdom and a symbol of steadfastness. The banking titan meticulously constructed a reputation that was virtually impregnable, resting securely on the pillars of banking secrecy, economic stability, and unwavering commitment to client financial security. The relatively recent years, however, have borne witness to a staggering transformation. From its once lofty perch as an untouchable banking titan, Credit Suisse has abruptly plummeted, evolving into what could be termed a financial pariah. The seemingly sudden descent of this once unassailable financial entity is as mystifying as it is instructive. This video seeks to delve deeply into the multiple components and significant milestones that marked this precipitous decline. The objective is to illuminate the important lessons that must be learned from this startling and somewhat unexpected fall from grace. Part 1. The early ascendancy of Credit Suisse, a deep dive into its historical narrative. Credit Suisse, a prominent actor on the global financial stage, was brought into existence in the year 1856. The bank was the progeny of a revolutionary idea: to raise and allocate funds for the dramatic expansion of Switzerland's rapidly evolving rail network, a project that was central to the nation's aggressive industrialization efforts. As the Swiss industrial sector matured and expanded, so too did Credit Suisse. Over the next century and a half, the bank strategically diversified its holdings and broadened its sphere of influence, making significant forays into virtually every major aspect of finance, including retail banking, wealth management, and investment banking. Incorporating the Swiss ethos of neutrality and financial discretion into its corporate DNA, Credit Suisse managed to chart a phenomenal growth trajectory. Its influence extended globally, across geographical boundaries and socioeconomic divides. The bank quickly established itself as a key player in the world of international finance, a trailblazer that introduced pioneering practices and set standards that others within the industry endeavored to emulate. The steady ascent of Credit Suisse to the zenith of global banking was a byproduct of a confluence of factors. These included carefully thought out strategic decisions, a conservative and pragmatic approach to risk management, and a comprehensive, in-depth understanding of the often complex and convoluted landscape of global finance. Part 2. Early warning signs. The unraveling begins. The global financial crisis of 2008 was a cataclysmic event that threatened the very foundations of the banking industry. Credit Suisse, however, demonstrated a resilience that was not typical of many of its peers, successfully navigating the turbulent economic waters. Despite the bank's relative immunity to the fallout of the crisis, this period served as a pivotal turning point for Credit Suisse. In response to the crisis, regulatory bodies across the globe began to initiate comprehensive overhauls of banking regulations, focusing particularly on the principle of banking secrecy. This principle had been a cornerstone of not just Credit Suisse, but of the entire Swiss banking industry. The tightening of the regulatory noose occurred almost simultaneously with a turbulent period in Credit Suisse's history when the bank faced allegations of facilitating tax evasion. These allegations culminated in 2014, when the US authorities levied a massive fine on Credit Suisse, totaling several $billions. The combination of the erosion of the principle of banking secrecy and the significant financial penalties imposed necessitated a sweeping transformation of Credit Suisse's operational model, as well as a comprehensive reassessment of its underlying business strategies. Part 3. Accelerating toward the precipice, a series of catastrophic financial disasters. What began as small, seemingly manageable cracks in the otherwise formidable edifice of Credit Suisse soon widened into gaping chasms. The early 2020s saw the bank face an escalating series of financial disasters, each one more crippling than the last. The downward spiral commenced with a substantial $900 million write, down associated with the hedge fund York Capital Management in 2020. The unstable ground on which the bank now precariously balanced began to crumble further under the subsequent, even more devastating, financial blows. In 2021, the bank was battered by the twin financial calamities of Greensill Capital and Archegos Capital Management. Greensill, a supply chain finance firm heavily backed by Credit Suisse, filed for insolvency. This insolvency exposed Credit Suisse to potential losses that were estimated to be in the billions of dollars. Simultaneously, the bank suffered another blow with the collapse of Archegos, a family-run investment firm. This event resulted in a jaw-dropping loss of $4.07 billion. These staggering financial losses, compounded by the severe damage to the bank's reputation, dealt Credit Suisse a debilitating blow, leading many to question the bank's future viability. Another significant phase in the downfall of Credit Suisse was marked by a series of regulatory penalties and the resultant financial strain. These penalties were incurred due to numerous breaches of compliance regulations and ethical norms, further compounding the bank's already precarious position. This pattern began in 2012 when Credit Suisse admitted to conspiring to aid tax evasion, leading to a hefty fine of $2.06 billion imposed by the U.S. Department of Justice in 2014. In 2018, Credit Suisse was again under the scanner for non-compliance with anti-money laundering regulations in relation to a corruption case linked to a corruption case linked to FIFA, the global governing body for football. The Swiss Financial Market Supervisory Authority, FINMA, found deficiencies in the bank's control mechanisms and ordered improvements. Around the same time, the bank was fined over $77 million in the United States for hiring practices in the Asia-Pacific region that violated anti-bribery norms. Then, in 2020, Credit Suisse faced another fine from FINMA, this time due to the spying scandal that led to the ousting of its CEO, Tidjane Thiam. These instances of regulatory non-compliance and the ensuing fines not only financially weakened the bank, but also significantly damaged its reputation. The confidence of investors, clients, and the market at large began to wane, leading to an additional tightening of the already strained resources of the bank. Moreover, the repeated compliance failures pointed to an alarming lack of robust internal control mechanisms and disregard for regulatory norms within the organization, further exacerbating the bank's crises. Part 4. Dissecting the downfall. Identifying and examining the key factors. The downfall of Credit Suisse is a multifaceted tale with multiple contributing factors. One glaring issue that emerged was the perceived inadequacy of the bank's risk management systems and controls. This inadequacy was thrown into sharp relief by the colossal losses associated with Greensill and Archegos. It became clear that the bank's rapid expansion and diversification into complex financial instruments had outpaced its ability to effectively manage the associated risks. Another issue was the prevailing culture within the bank, a culture that prioritized aggressive growth and revenue generation over careful risk management. This culture was seen as a key contributing factor to the bank's steep decline. The period of turmoil also brought to the fore significant issues related to corporate governance. It exposed potential oversights in regulatory supervision, suggesting that the stringent checks and balances necessary for an institution of credit, Suisse's magnitude, may have been insufficient or lacking altogether. Part 5. Learning from the past, building for the future. The road to redemption. Credit Suisse, despite the daunting challenges it faces, has begun to chart a course for recovery. This path is undoubtedly steep, and the climb back to the top will require significant effort and perseverance. The bank has already initiated several key measures to facilitate its rehabilitation. These measures include a comprehensive overhaul of its leadership structure, a rigorous review of its operations aimed at streamlining processes and eliminating redundancies, and a thorough reassessment and bolstering of its risk management systems. However, the task of rebuilding trust with the various stakeholders, the investors, clients, and regulatory bodies, will be a Herculean challenge. The saga of Credit Suisse serves as a stark reminder to financial institutions across the globe of the delicate balance that must exist between risk-taking and prudent management. The tale also underscores the critical importance of robust corporate governance. The banking industry can derive valuable lessons from this incident, emphasizing the importance of maintaining transparency, ensuring regulatory compliance, and remaining steadfastly committed to a customer. First approach, Part 6. Conclusion: the aftermath and the lessons learned. The downfall of Credit Suisse has sent shockwaves throughout the global financial community. What was once a symbol of stability, a shining example of successful banking, is now viewed as a cautionary tale. Credit Suisse serves as a stark reminder of the severe repercussions that can result from neglecting risk management, ignoring corporate governance standards, and failing to comply with regulatory requirements. As the bank now embarks on the difficult task of rebuilding its reputation and re-establishing its stature within the global banking community, its story serves as a compelling case study for the global banking sector and the regulatory bodies tasked with overseeing it. This narrative powerfully underscores the dire consequences that can result from prioritizing financial success over these essential components. We hope this in-depth analysis of Credit Suisse's downfall has provided valuable insights. There are more fascinating topics and intriguing stories we aim to explore in the realm of global finance. Don't miss out on our future videos. Subscribe to our YouTube channel and join our community of knowledge seekers and thought leaders. We invite you to engage with us in the comments section, sharing your views and queries to enrich the conversation. In our fast-paced financial world, staying informed is crucial. So connect with us, stay updated, and let's demystify finance together. Click subscribe now to become part of our vibrant finance community.